All right, good afternoon, everybody. Let's go ahead and get started with this week's broad market analysis. So, just a quick reminder, I will be taking off on Thursday morning, early, 3 o'clock in the morning, to head out to see my parents, my grandson, and my oldest daughter for Christmas. So, happy holidays from me and Simpler Trading here. We really appreciate you, and I hope we have a fantastic week. I'm going to be going over all the normal things that I go over. I'll be showing you some extra things, and of course, I'll be educating through this as well. Remember, I am a professional supply and demand trader, and the overall process here is to help you identify those zones and feel consistent in your trading. Anything that I show you on here, especially like econ data and any sort of noise outside of that, is just a catalyst to push price into supply and demand. The next thing I want to tell you, for anybody that doesn't realize this, if you're watching me on YouTube and you want to watch this recording later, make sure you watch it at a speed of like 1.5 or 2. It's a lot easier, a lot quicker to go through this. And before we get started, please hit the like and please share this with your friends and family. I know that there are hundreds of you out there who are here in our service and really appreciate what we do. And I'm sure there's somebody out there that could probably use a little bit of help going into 2024. Let's go ahead and get started. So the first thing we're going to be looking at is the econ data. And again, all of these things over here are just something that could create a little bit of volatility in the market. Our job is to identify those zones and these levels beforehand, and I'll be showing you those here a little bit shortly. So Monday, December 18th, that's tomorrow, we have Home Builder Confidence Index. These times are in Eastern Time. Tuesday, we have housing starts and building permits. Wednesday, U.S. current account, existing home sales. Thursday, initial jobless claims, GDP revision, Philadelphia Fed manufacturing survey, and U.S. leading economic indicators. Friday, the 22nd, we have durable good orders, durable good, minus transportation, personal income spending, PCE index, PCE year over year, and then new home sales and consumer sentiment. And this one could give us a little bit of jolt on Friday, so please be aware that comes in about 30 minutes after the market opens, okay? Earnings. I'm using Earning Whispers here. I've been following them for many, many years. Absolutely love their content, and I'm able to rely on what they're putting on their calendar. Now, this is towards the last week of earnings for this year, and we do have some nice bangers in here. Currently, we have FedEx. We're in that position here in the room. I use my earnings strategy, and I use those debit spreads around supply and demand levels, and I'll be holding those into earnings as well. Then we have Micron. Here's a name that I haven't really paid attention to this year, but I'm sure it's doing okay. I may use my earnings strategy for this name as well. And then on Thursday, we have Carnival. All right. And then we have CarMax and Nike. These are all names that I'm interested in. Okay. Let's go ahead and move down here. So let's check out last week's neutral strategy, and I'm going to zoom in here for you guys. You guys know all about this, and if you don't, well, welcome. I put this out every Sunday, and this is something that you can use, actionable charts, and the reason why I came up with these are for traders who are on the go, who do not have the time to be in the room, or maybe they're in some kind of meetings, or they're taking care of school. There's just all kinds of different reasons. So the reason why I put this together is for those traders, right? I want it to be very simple, straight and forward. Basically, you go long over the green level, and then you trim out at the targets to the upside. And if we break down below the red levels, then we short and we cover at the levels to the downside. Now, the way that I get these levels, supply and demand, Fibonacci's and Fibonacci extensions if needed. All right. So how did this work out this week? And you guys can see it worked out perfect. Not only did we get the break above the green, but we hit targets 1, 2, and 3 on the QQQ. And over here on the SPY, we hit targets 1 and 2. Didn't quite make it to 3, but held target 2 before the end of the close. So what was resistance right here became support. Now we do have new levels coming out for this week, and we'll go ahead and go over those as well. And again, this is your SPY and QQ neutral strat for this week. So during this video, once we're finished here, this is where I'd pause and go ahead and place these levels on your chart if you like them. This is our neutral strat. You can see 467.18 by 470 211 is going to be neutral. Basically, we don't want to do anything in here. If you've never watched this video before and you do not understand how to trade the neutral strat, I have a very quick demonstration and video to educate you on that. It's probably less than 5 minutes. Take the time to find it here on my YouTube channel and watch that. Targets to the upside this week, 474, 478, and 482. To the downside, I would expect support to come in between 465 and 462, but I did, and it looks a little bit different than normal, I went ahead and identified this demand zone for you guys. So we have more than 3 targets to the downside because I wanted to show you where that demand slash support is on the SPY. And same thing over here on the QQQ. 384 level here by 393, and this one's pretty wide, but again, a lot of imbalance down here. This is where I would expect support to come in on the Qs. Again, you just need the levels and understand that quick 5-minute video on how to do this. And Lori, good morning to you. Let's go ahead and move on. So the SPY, the bigger picture, this is where I'm going to take this away. All right, and I'm going to put this up above, and we'll bring up our trading view really quickly. And that way you guys understand that we are keeping notes. I'm keeping notes and sharing this with you almost on a weekly basis, but our concentration is the quarterly candle. And the reason why we do this is because I feel over the years I've learned a lot about our family members, our trendy members who are here trading with us. And not everybody's looking at a 5-minute chart. Believe it or not, swing trades actually do work. Conditions really haven't changed in the market. I just think that social media has created a lot of buzz and a lot of chaos. This is indeed the bigger picture, and I just want to point out a few things to you. The trendy cloud, or your EMA cloud here, is support until proven otherwise, and you could see that going back many, many years. It's not until we start to break underneath this cloud that I really start to fear a real market crash, as somebody would label it. And even then, if we were to get underneath that cloud in 2024, it's going to push us right into a nice demand zone. But right now, we don't need to be concerned about that. I just want you to know where it is, and it's about 283 by 218. Now, going into this week, let's go ahead and read last week's notes and then read this week's. Update 12:10, 19 days, 6 hours until this candle closes. At this point, this looks, and I anticipate, what we call an IAU, stands for inside and up. And once again, you can watch that video over here on our YouTube page. Stay bullish until the structure changes. The target remains 463 by 471. Support is 451 by 446. And as you guys can see, we stayed at the inside and up. The structure was not broken, so we stay bullish. We did hit our target. We talked about it last week. We hit that 75% of the supply zone at 471.79. We pulled back from there, just like we would expect. Any target to the upside is resistance until proven otherwise. Update for today. Target 471 hit. Short-term support 454. Longer-term support 446. We have 12 days until the close of the quarter. Upper targets are the all-time high, and if you just come over here and bring your cursor, you guys will see where that is. It's around 482. Now notice price is at 469, and we had a little bit of digestion, it looks like, on Friday, and that digestion looked very healthy. And again, I still stay on the bullish side going into this week, as long as the structure is holding. And let me take you to a whiteboard just so you understand the structure that we're looking at. This is the initial candle. It does not matter if there's wicks on this. And what I'm looking for, as long as price stays between the body of this candle, okay, and this goes inside and up, so this is the formation itself, inside and up, as long as that formation stays intact, I stay bullish. And you can see right here, let's go ahead and zoom in exactly what that looks like. And right there we have the inside and up formation, and it's this guy right here, inside and up, okay? So again, these are our levels for the bigger picture. Again, things look great. We're getting close to the holidays. I would expect things to get a little bit slower, a little bit more sluggish. But listen, the bulls have been in charge since we got over the bullish channel of 2020 and 22. Once we went bid over the 23.6 of 424, things were looking awesome. And here we are just hanging out, looking for potentially a new all-time high. That is your SPY on the quarterly. Let's go ahead and move into QQQ, looking at the bigger picture. All right, same thing here. We have an inside and up, looks beautiful. Let's go ahead and read our notes from last week. Update 1210, 19 days, 6 hours until this candle closes. At this point, it looks like we close as an inside and up formation for the quarter. I'm bullish and buying the dips until the structure changes. Next target very close at 395. New support 379. Over 395, we can see 398 by 410, and you guys can see we closed out the week at 405, and we pushed up a little bit over that, maybe towards 406 this past week, and so things are looking great. We're hitting the levels we want to see. Far as this week is concerned, our targets were hit. Short-term support is at 399, and my long-term support is 390. Targets are the all-time high and 420. And the way that I got these extension targets is I simply just measured the candles that I'm looking for as far as a range is concerned, and we came up with 422. And as I said, the all-time high is right around here on the QQQ. Okay, so right now the all-time high comes in around 408 or so, and like I said, we got very, very close to it. And the question is, and I'm sure a lot of technical traders will be looking to say, hey, do we get like the double top here and then a big pullback into the Christmas holiday, or do we simply blow it out? Instead of speculating and getting too biased, I would say let's just look at it from a day-to-day standpoint for the rest of this year. All right. And I'll be doing that with you. Every single morning, we're going to wake up. We're going to talk about the ES and the Nasdaq futures, how that relates to the SPY and QQQ. And I'm going to coach you to the victory of the end of this year. Okay. So don't be concerned. All right, just stay away from too much opinion and too much noise, because that tends to put you on the wrong side. Let's just follow the trend. All right. Now, same thing here. I'll show you the bigger picture. You guys can see that the quarterly cloud has worked very well. These are buy signals that come out of my cloud. It's all programmed in there to kind of let you know, hey, this is where I'd be going along and so forth. You can see that stuff worked out really well. We dipped into our, looks like the 22 EMA probably. We came into that. We had a nice bounce. We never broke down below the cloud. And once again, I'm not really concerned about some kind of market crash or anything like that unless we start to see prices under here. And of course, if we were to get under there, guys, that's 200. That's 50% of a pullback. Obviously, by then, that would be what we'd consider a nice little market crash. Now, as far as like right now, we're looking at structure. We're inside and up, just like the ES, just like the SPY. Like things look great, right? Until that structure is broken. Now, I don't want to sit here and say, hey, we're not going to go on the put side. I've already started put debits, and we'll talk about that a little bit later. So I'm scaling into a potential opportunity that the market would pull back, okay? There's no guarantee. And the way that I want to approach this, again, is not to get too biased. I'm more on the net long side and scaling into later dated put debits, small risk, big returns, and we'll talk about that a little bit later. But notice, again, the inside and up formation, we push up, we're looking for that all-time high, and if we extend over that, we have some targets there to the upside from a quarterly perspective, 422 by 432, okay? All right, so our next thing we're going to go into is going to be the dollar. This is a really big one that I want you to keep your eyes on, and we're going to go to a week. We are not using a quarterly here, and again, these are going to pretty much be the same notes that I tell you every week, is that, we had this, we coached this, we knew exactly and how we felt that price would react, and it's done that. I identified the inside and down formation right over here for you. We waited for the dollar to come up here. Once the dollar came up here, we saw the market then start to catapult to the upside, and now looking at potentially 8 weeks up, right? Since then, and guess what? The dollar actually looks like it could come in even more. So these are the levels that I want to give you and talk about. I could see 100.45, and this is a trendy edge down here. This is where it's lined up. It's a playing field of a demand zone. So demand meaning where buyers are willing to step in. This is where we could see prices in the dollar start to bid up. And so just be aware of that. And we could definitely get some kind of boost from 101.43 as well. But I do see this happening, and I see an 85% probability of that happening to the downside as long as the dollar does not bid over 104.30. And the reason why I say that is because this cloud right here is lined up with that 104.3. Okay, so resistance until proven otherwise. That means even if we bounce here, I expect it to reject and roll over, and the dollar could end here by the end of the year. Okay, and in the meantime, the market continues to bid at its imbalances, and we find all-time highs. Okay, so that's what I'm looking for in the dollar. Just remember those two levels. And just really quick, make sure you follow me out here. This is me. So if you're following me, you're going to find some of these levels that I'm putting out here in those numbers right here on my Twitter page. Okay, let's go back to the dollar and let's get into the TNX. Okay, so the 10-year treasury, this is important as well. And I put a little note here this week. I just love supply and demand. You guys know that. I'm super passionate about it. And it's weird, right? How retail traders, that's you and I, but again, I teach you how to think like an institution and be on the right side here. But don't you find that it's strange how retail traders rely on so much news and information to follow like where rates are going and what the treasury is doing, when all you really have to do is just concentrate on structure. Once the price of the TNX here went inside and down, we knew and expected for the treasury to come down. Once it did that, it was a if this then that scenario. If the TNX could not break over this level, we expected it to move down until we found an inside and up. We found something right around in here. We got a little bounce there, and then it broke down. And now here we are again, folks, at an inside and down formation. Notice a couple things here on the momentum. So notice my candles are green, but now they're white. So the momentum is dying down. And we could see prices continue to push down towards 3.8. So here we are. This is an inside and up formation. We could see a bounce here. But again, if it can't get over the cloud, I'm not too concerned about it. Matter of fact, right up here towards 4.02 and about 4.06 is going to be resistance. And then we have 4.2. So please understand those levels. So again, resistance here and resistance here at the inside and down. And if we get above the inside and up, then I would say more caution is warranted. Okay. All right, let's go on down here into the skew. Now the skew this is magnificent. It really is. To take a look at this and to think that this thing had pushed up this past week all the way into 162. I mean, if nothing screams more caution than this, I don't know what will, right? All-time highs, skews like pushing the limits. But let's just take a bigger look at this. Let's look at the monthly. Let's go ahead and go back just like this. Okay? And I want you to see this, all right? We are pushing up towards a skew level that has not been seen except for maybe twice before, 3 times before. And this came in 2021. See, the skew went all the way to 170. So when the readings of the skew are this high, what we're looking for is the SPY, the market, the QQQ, the Dow, the IWM, all of these things will pull back. The timing is the variable. And this is where it makes it tricky. And this is where I wanted to talk about those put debits. So what I'm doing is I'm scaling in to put debits. And I understand I could be wrong. The momentum is super strong here. But I'm also net long in my portfolio. But I'm scaling into those put debits. And the reason specifically is I don't think it takes too much to understand that we're extended here. We haven't seen 7 weeks up since 2016. We're extended on some of the time frames. We're in supply zones. We're testing those all-time highs, and the skew is saying, hey guys, back off, be careful. But here, listen to me. I've been in this position before. I've had my put debits go against me. And one thing that I learned is to scale in, be ready for continued move higher, and understand that timing is the variable. When I talk about getting into put debits around this area, we're talking anywhere from 30 to 90 days out so that you can buy yourself some time. Now, one very important note that I want to talk about the skew, and I've been saying the same note for several weeks, if not months. No update, but this continues to be relevant. The skew continues to stay in the protected area. Okay, so right in here. All right, and fluctuates to bearish and bullish in here. In my opinion, we stay within here this year, 2023, and we see a more extreme level in early 2024. Extreme would be at the green lines. And basically what would happen from here, and again, time is a variable, once it starts to happen, the market will be in absolute fear when we get here. And we go back and you can put the SPY behind this chart to see the proof of concept, but then it turns. Then it's time is the variable for the call side, and we're buying anywhere from 30 to 90 days to the upside. Okay. Right now, this year reminds me a lot of 2021, where we stayed in this area for quite some time, and you could see it right in here. And a lot of traders knew that, hey, we need to be cautious, but they kept getting run over because the majority said we need to short, right? And so the majority got run over, and it wasn't until they gave up and started to become bullish that the market actually really gave us a big turn to the downside. And you can see that. And once we came into these extreme levels, the market absolutely rallied. And if you don't remember, in 2023, we pushed up 200 points on the ES futures in one session. One of the biggest moves I've seen in a very long time. So if you don't think the extreme levels work, they do. But let's end it here. Timing is the variable. Let's go ahead and move on. Again, we are at extreme levels here on the skew. Fear and greed index, let's go ahead and bring this down really quickly. You can see here on the fear and greed index, we're at 67. We actually pulled back 1 point since last week. All right. So if you thought we got greedy, you're wrong. We pretty much just stayed where we were. And so when I show you this, the fear and greed, and I show you the skew, how we're just staying in this area, you could sit here and say, no one's really willing to budge yet. There's not a lot of money being, put on the fear side. People are still buying calls, and the market still continues to push to the upside, right? Now let's go ahead and move down. We're going to go into the ES futures and the Nasdaq futures. And please, don't leave this video here. Don't think just because you don't trade futures that you cannot benefit from this. Futures have by far, since I started trading, have become the biggest part of my analysis, and it really keeps us on the right side. I want you to think about everything that I'm telling you here, and then I'll give you my overall sentiment, okay? So let's go into Thinkorswim. And we're going to open this up, and let's go ahead and type in /ES. And a couple things I want to tell you about futures really quick if you didn't know this. On Thinkorswim, some of the things that you can do is you can come over here to the active trader and see this question mark right here. This is going to tell you how much it costs to leverage one of these. And it's costing right now in your account, you have to have $14,784 just to hold one lot of the futures. One lot of the futures is the same as you going out and buying 500 shares at SPY. Okay? And understand, if you were to buy 500 shares at SPY, it would cost a lot more than $14,000. This is why people like to trade the futures. Another thing about the futures, it's really neat because you can hedge your portfolio. And we talk more about that in the Essentials room here at Simpler. Okay, simplertrading.com, and you can come over here in the essentials room and learn all the essentials you need for trading. All right, and then as you progress, then you can pick a room that you resonate with. Okay, so once again, that's what we're looking at here. And so every 10 points in the ES futures equals $1 in the SPY. So if you listen to me and you understand where the support is, you understand what we're going for, then you can relate that into your SPY and your SPX. Let's go ahead and go over the weekly, okay? Now, weekly, price stalled at 75% of the supply zone. And this is supply zone that we put out here a long time ago, like a year ago. Okay. And we finally made it here, and it was fun while it lasted, and we coached through it, and it's amazing. And the question now comes, do we actually push up and over this and to extend it? And again, this relates back to what I'm talking about with the SPY. It really is a if this, then that. I'm using the future YE as support and the 38.2%. Let me go ahead and show you what I mean. Right underneath this white line here, it says future edge support. That's our trendy indicator that's identifying support into the next year. Okay, so I'm using this level, and then I measured with Fibonacci's and found the 38.2, which is 4559. And as of right now, this is support. And if you look right underneath here, check out this 9 EMA. And this is what's amazing about good analysis is we take all these different things, and then you have what's called synergy, right? Everything synergistically comes together. We have math, Fibonacci, we have demand zones, which is structure, and now we have some 9 EMA, and so you have a lot of confluence. If anything were to happen, this is where I'm buying, and if price gets down there, I have other ways of showing you on smaller time frames how we enter that buy. It's not just necessarily just because it drops in there, do you go long? But this indeed is an area that I would be putting on your ES futures charts for the weekly. Now, as far as the supply zone goes, if we can sustain moves over 4772, 4810, we have potential breakout into the new year around 4871 to 4900. Okay. Overall sentiment, I'm leaning more cautious this week with less emphasis to the upside unless we totally take out last week's high and build a base there. Basically, I feel going into this week that 4800 is your over under, that nice round number. But keep your eyes on the 4-hour time frame, and I'll show you that here in a second. Bulls need to stay above the cloud. If not, then refer to the lower 4H imbalances that I've marked on the chart. I'm going to show you that here in a second. So again, this is the weekly. This is our look. I gave you all the information I could give you on that. Now let's go ahead and look at the daily. This is for our traders that are looking for buy triggers from a little bit, not a weekly perspective, but a little bit less. So my buy triggers are at 47.5 by 47.15. You could see that on the daily, there's some confluence with the 9 EMA at that 47.15. You could see that price has moved up. It's extended. Right? There's some nice divergence between the 9 EMA and the price. And of course, if we were to look at this, technical traders who like shapes would say, hey, we're going to start flagging and so forth. Couple things to take away from the day. We have topping wicks. Topping wicks suggests that around these levels, the bears are trying to basically build a line in the sand, if you will, that says, hey, we don't want you to get past this level. All right. So when that happens, then I start to drill down into a lower time frame. Here on the on the 6 hour, I want you guys to take note of this. Okay. And you could knock this on the 4 hour as well. Actually, let's do the 4 hour. Okay. Right here. And I want to show you what's going on. So we have the cloud, and it's all fractal. The cloud on a weekly, as long as we're above its support. The cloud on a daily, as long as we're above its support. Now we're on the 4 hour, and notice what's happening here, right? It reminds me of like a swimmer who's trying to keep their head above the water. We have topping wicks here, we have topping wicks here, and we're starting to finally creep down just right at the line or underneath the line here. Okay, good morning, Tekken. So as long as this stays above the water, we're good, right? But if you start to notice that we start to break down below here and stay under here, then I start to expect prices to come into my edges. 47.61, 47.50, right? And then imbalances in the market, right? Where price took off so quickly that orders were not filled. And of course, if there's not enough buyers, price goes back to where it remembers buyers. And believe me, buyers want to step in here. So this is how we identify those imbalances in the market and looking for that demand to show up. And again, You guys have this in the room. You can see all the different imbalances and support and demand zones that we've created during this beautiful rally. So please take note of that. And again, all of that stuff's right there for you. Now, as far as tonight is concerned, I've already started to put together our nightly or intraday trading. I'm going to keep the same levels here on the ES futures. These worked really well for us on Friday as well. I can't make this stuff up. Notice that price came into supply. You could have shorted. It came down into demand, went long. And then we pushed up right here to the PMZ before the close. And then we kind of stalled. So I'm going to keep the red and green targets for tonight. The only thing that I've changed on this chart so far is the liquidity chop zone. So again, pause this right here. Go ahead and put this on your ES futures chart if you want. Most of all, I haven't changed a whole lot, just a liquidity chop and a few extra lines here for tonight's moves. Okay. Now let's get over to the Nasdaq and take a look what's in store. And just like the ES futures, you can open up the Nasdaq and get an idea of how much it costs for you to leverage. If you don't trade the futures, what you could do is take this information and apply it to your QQQ. So about every 42, 44 points in this relates to $1 in the Qs. Okay, so let's get over here to the weekly and let's talk about it. My overall sentiment was correct. Last week I said, rip it. I'm looking for the test of the zone. It's been 3 weeks of back testing into the trendy edge. That was exactly this level right here. We talked about it last week and we were exactly right. They freaking ripped it to all-time highs. And now our blueprint has changed a little bit. I got rid of the red zone. I put the previous ATH here, and it might not be perfect to the tick, but you get it. I put a line right here and I'm saying, hey, listen, 16,772 tonight, if they open up, they pull back and they hold this level, then you could expect prices to start to move up towards the extensions. Now for me, just like the ES, I feel like going into this week, your over under is going to be 17,000. That round number, right? So that round number, if they can get up and over this, they really mean business here, the bulls. If they can't and we reject, then I think 17,000 just becomes that psychological number and kind of ties into the factor for this week. So again, we have an over under on the ES futures and we have an over under on the Nasdaq. If we gap up, look for that 17,000 tonight. If we don't, if we gap down, we'll talk about those levels as well, okay? Let's see. Is this week the NQ and ES holds? They definitely ripped it to the all-time highs. And again, the 17,000 is just really important, but we're going to talk about the 6-hour chart here in a few seconds, okay? So this is your blueprint going forward. We have support, we have the 9 EMAs, we have the trendy edges. All of these things are really important. 16,268 by 15,905. This is where I'd expect buyers if we indeed get a pullback into there before Christmas. I think it's a buy the dip. All right. Now let's go to the smaller time frame. This is your daily. One thing to note here, the Nasdaq, it's been a leader, baby. This is the canary in the coal mine, right? It's letting you know what's going on. And these guys just built structure on Friday. And if that structure stays in place, just like I was showing you on the quarterlies, then I would expect this to move higher. Resistance 16,876. Short trigger for the dailies 17,100 and a half, so 149, and then your trigger long 16,556 by 16,316. Now again, please, if you're not a trendy member, don't forget, spend the $7. Seriously, come over for a month, learn from us so that you don't just look at these levels and think we're going short just because they hit here. We have a very particular process that I teach, so please understand that. And for right now, if price gets here, we'll look at it on a smaller time frame and decide whether or not we're actually going to short there. All right, but these are the levels for the daily. Again, you can freeze this and then jot these levels down and see how they work for you. Okay. Moving on over, I told you 4-hour on the ES, but we're going to make this a 6-hour. And the reason why I'm going to 6 on the NASDAQ is because this is the leader. All right. And I really want to know what's going on here. When we go to a 6-hour, check this out, guys. When we go to a 6-hour, we have an inside and down, and we have an inside and up. We know the daily is an inside and up. Basically, and we had this awesome education that we did on Friday morning teaching you this, we have what we call opposing zones. right? And those opposing zones are literally right on top of each other. When we have opposing zones, supply and demand, right on top of each other like this, you can expect choppy conditions. Let's make this if this, then that. If price can get over the 16,871 and hold there, that's where I'd be getting bullish. And if price breaks down below the cloud, that's where I'd start getting a little fearful from an intraday perspective. I shouldn't say fearful. That's the wrong word. I start to change my tone and maybe looking for the short is what I should say. Okay. Notice the 6-hour cloud, very intact, looks beautiful. This is the way to hold that trend. Okay. What's up, Christopher? How are you? Thank you very much. All right, so everybody understand that? Imbalances right here, 16,583 by 16,391. Your support down here, and the reason why I say support is because you can see there's a lot of support here, not necessarily structure that's beautiful, but just support. They have built a base across the line there, and when I say across the line, I mean right here, right? So again, support, imbalance, they're two totally different things, and then we have imbalance here as well, demand down here below, okay? So that's what we're looking for on the Nasdaq. Now, I haven't done the intraday chart for tonight, but we could quickly do that with each other really quick. But I want to give you my sentiment on the Nasdaq. I'm leaning more cautious this week with less emphasis to the upside unless we totally take out those levels I just gave you guys. We got to build a base above it. So really approach this week as if this, then that. If price breaks over this level, then I'm going to do that. If price breaks down below this level, then I'm going to do this. And if you can just approach it and stay away from all the talk and all the noise, then guess what? You're going to keep yourself out of that big group of, don't be a follower is what I'm saying, right? 90% of people are not doing well in many cases on trying to judge which way this market is going. And we are doing it week after week. And I have to say, the coaching, the analysis, everything is keeping our traders on the right side. I am not biased in any way. I'm just saying, listen, if our demand zones hold, let's stay long. If the supply zone rejects, let's pull those stops up. Let's have a good time. If you're listening to people who are telling you they know this will happen, stay away from them. Okay? Stay away. You're going to get coached wrong. You're going to find yourself with too much bias, and it's going to hurt you. Okay? Let's do this blueprint together really quick. I'll show you how fast I do this. So from a nighttime perspective, we did this the other day, and we'll do it again just to kind of see how it works out. Okay? So we are going to start with a 2-hour, just like this, and we are going to look for structure. Notice right here we have an inside and down formation right there, and you can see that it's been resistance ever since. So we're going to go right there, and I am going to type in here resistance. Okay, so let's do caps here, resistance, just like that. Okay, and we are going to create some levels. Just like this. So this is like a zone, if you will, for tonight. All right. And let's do liquidity chop. Like, where do we want to put liquidity chop? Instead of it being the 16,845, a regular line, let's go ahead and put our liquidity chop there. And the reason why, remember, what I'm trying to do, all right, is make you understand if price were to push up into this level, I expect it to reject. I expect retail traders to get their stops taken out if they try to go short on Friday. And then they're going to build liquidity until about, somewhere between 2 and 3 a.m. Central, and then they'll make the move, all right? So we're going to raise this up. Give me 1 second here. We're actually going to put it right here at 868, so 16,868. And then as far as our targets over this, if it can get over this, all right, then I would expect an attempt, okay, of this high over here. So right there, right, just like that. And then as far as the liquidity on the downside, where I expect buyers to show up, and for anyone that was going long, if I wanted to take your stops, I need to understand where that is going to be as well. Check this out. So I'm going to take some Fibonacci's. I'm going to go from this pivot low into this pivot high. I'm going to use the 38.2 right there. And again, you learn all about this in the room, right about there. It doesn't have to be perfect. And if we're to break below that liquidity chop, now I need to understand where my targets would be. So I'm going to use some Fibonacci. I'm going to come right above the 50, and this, I really like this level because the 50 is in line with my buy signals, and it's also in line, if you zoom in here, it is in line with this structure. So I'm going to have a target there, all right? And then we are going to use our right here and right there. And I'm a little OCD, so give me a second here. Really off on that. Right there. And we're going to use the 618. Now let me teach you a little bit about Fibonacci. The 618 is your golden Fibonacci. And anytime you're measuring something, so what I'm doing is, as a visual, I'm measuring from here to here, right? This is a range. This is a rally to the upside. And the 618, what it means here is if the 618 breaks, then this trend is no longer intact. Okay, so these are the major levels that I want to use for tonight. All right, so I'm going to use those right there. And because this is a big imbalance, I'm not going to change my green box. But very careful, please listen to me. Just because the green box is way down here does not mean that the major turn doesn't happen right in here. Okay, so please understand that. It could be that the range tonight is just going to fall between the 16,885 and down here towards 16,725. The reason why I want to keep the green zones down here is because I believe if I were out shopping for my favorite product, this is where you find better prices. Okay, at the imbalance of this market. The only thing that keeps me from thinking that we may not come all the way back down here is this wick. They pulled it back into this imbalance, and then see how the imbalance pushes it back up into this supply right here? So that's exactly what's going on. If this, then that. So for tonight, if we break over the pivot high here, we could see 16,933. And if we break down below the 618, then we could see down here towards 16,666. Again, these are my two opposing zones. We'll keep these up here. And I understand they're not very pretty. I need to work out some of this stuff real quick and make it look a little bit nicer. But these are our levels. All right. So for the few people, and I know mostly everybody comes in here and takes a look at this, you know, later on in the day. But if anybody's watching it live, if you have a question right now, go ahead and ask me. Christopher, it looks like you're saying test. I can see your post, so we're good there. Yeah. All right, so that pretty much does and sums up my analysis for this week. And again, you know, if you guys need anything else, I'll probably do. We're celebrating Christmas a little early with friends and family today, so I'm gonna be doing a dinner and hanging out. So I need to get on that. But other than that, I can't wait till the market opens. We'll see you guys early, bright in the morning, 30 minutes before the market opens. We'll be live. Can't wait to trade with you. Have a beautiful week.